Hello traders, Gary Wagner for Trending Markets, approximately 11:30 in Honolulu, 5:30 in New York, 21st day of October, and we are looking at a Dow Jones Industrial Average off about 0.25%, 48 points lower. This, of course, following 2 days of tightly consolidated trading ranges in which we have seen some real potential resistance in this market that comes in roughly at 17,200. Daily chart, if you take a look at the last couple of days, you can see we had this pure doji almost yesterday. We've got the small down day today. Very, very small body day on the prior day. Of course, Monday, Tuesday, and Wednesday. Friday was an update taking us to the most recent, what I'll consider closing highs, because it closed above these highs right in here. However, we see some real potential for this market to move into a short corrective stage. Now, we talked about the fact that when we look for different levels of support and resistance in the market, after this market had a fall from grace, this of course being the August meltdown in the market, we then had it shoot up, our shooting star. This gave us a strong indication the market was going to move lower. We found some really good support at 16,000. And from 16,000, we had this market absolutely re-enter a rally mode up until it's found some resistance at around 17,250. I'm going to draw a line across this particular high that we got into the market, because what we're seeing is as it goes up into this area, it starts to jet into these areas in terms of trading activity, which could offer some real resistance in the market. And we are currently, of course, well past, let's draw this across, this particular price point. So I am looking at major support right now in the Dow Jones Industrial Average, roughly at about 17,000, and it's based upon these lows here and the fact that we've exceeded that and now found some sort of resistance at around 17,250. Now, as the Dow Jones Industrial Average had quiet closes over the last couple of days, the S&Ps were down. In fact, they've been down, this being the second day in a row we've seen it, and you can actually see a pretty dramatic drop in the S&P, tail up near these highs just above 2029, roughly in that area. We also have two moving averages, our long-term in blue, 200-day, and then our 50-day moving average in red. So for our major level of support right now in the Standard & Poor's, I'm putting that at about 1975, and minor support right at around 2,000 on the Standard & Poor's. Of course, the really big news today was a continuation in the drop of crude oil. Crude oil falling out of bed, down 2.25% over $1 per barrel, 45.26. Daily chart really shows everything that you want to look at in terms of what kind of market we've seen. Japanese average format, we've had consistent lower lows come in the market. Of course, there's not true opens and closes, but body size is moderate, not really large and not really small. So the downtrend that's currently in crude oil is, in my opinion, going to continue to the downside. We're not going to find any support. And the fact that when we look at our bias or channel lines, it's almost flat or neutral, but we have broken below that. So in terms of where I think oil could go, 44 has been really a line in the sand that we've been drawing, and that's based really on this whole cluster that we have in here. If we see this market break below 44, well, the next real strong level of support doesn't really come until 39. So traders, a break below 44 will probably look to short the market. In terms of the Standard & Poor's, we were looking for a point to enter the market, but we're certainly not seeing that support right now. If anything, we are seeing some weakness. We remain neutral today, but we will be looking at crude oil from the short side and looking to see if the U.S. equities markets can find any support. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Thursday. Bye-bye.